This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened. The top stories this hour. Asian stocks set for gains after Wall Street hits record highs. As President Trump tells the World Economic Forum he'll demand lower interest rates from the Fed and cheaper oil from OPEC. The president following up his Davos address with executive orders on crypto and AI aimed at securing US leadership in the technologies. And the Bank of Japan looks set to deliver its biggest interest rate rise in 18 years today in a show of economic confidence. OK, the market has just opened here in Australia, staggered open of course, so hard to get a read on things in the get-go, but we are a few points to the upside here, as we would expect after that record close in the US. Get to that in a moment. Nikkei futures meanwhile looking a little bit softer. We've got the yen just holding on at below 156 there in Japan. Of course it is Bank of Japan decision day. We will get CPI numbers for Japan ahead of that Bank of Japan decision for the month of December. That's seen ticking up pretty strongly, 3.4% on year. Once you strip out energy and fresh food, however, it starts to look a little bit more stable. We're also going to hear from the Australian Prime Minister Anthony Albanese today, his first speech of the year at the National Press Club. We're awaiting an announcement on an election date. It's got to be held before May 17. We might not get that, but we're probably going to get something in terms of a policy agenda. Let's take a look at how US futures are tracking. Meanwhile, we did have markets in the US closing at yet another record high. One exception to that was Electronic Arts. That slumped the most since 2008. They're warning there on weak game sales. Nasdaq and S&P futures currently looking a little bit softer at the moment. We've got bond futures softer as well. We did see yields on the 10-year advanced modestly. We have a Fed meeting, of course, next week, and we heard from President Trump speaking on a range of matters. He wants lower taxes, and he's already started applying pressure for lower rates, not just in the US, but everywhere. Had some thoughts on crude as well. Trump pressuring OPEC to deliver cheaper oil. We'll talk about that more in a moment. And he also says cheaper oil would end the war in Ukraine immediately. So we're seeing softer oil price there. New York crude, $74.25 at the moment. Well, I did mention that President Trump has opined on a range of matters today. He had some thoughts on interest rates as well. Let's take a listen to what he had to say.
With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us. All over, the progress that you're seeing is happening because of our historic victory in a recent presidential election.
All right, joining us now is Shamaila Khan, head of fixed income, emerging markets in Asia Pacific at UBS Asset Management. Shamaila, thanks for joining us today. Feels like a good place to start. The president talking about tax cuts, lower rates. Obviously, that would have implications for inflation, implications for yields as well. How do you unpack all of this?
Well, I think what the market has done, Paul, has been focusing more on what has been done rather than what has been said. And, so far, the beginning of the new administration has been quite pragmatic, where the focus has been on domestic issues, not on tariffs as the market was faring, and not on anything that would disrupt the market continuing to rally. And we've seen that. We've seen that with EM currencies rallying versus the dollar, EM assets performing very well, and so far the policy mix, despite the rhetoric, has been quite measured in terms of the impact to the market.
What's the policy mix going forward going to look like, though? I mean, I mentioned we did hear from President Trump on a whole range of issues today. And what are we, 3 days into his presidency, and he's already starting to pick a fight with the Fed, perhaps not unexpected. Let's have a listen to what he had to say.
I think I know interest rates much better than they do. And I think I know it certainly much better than the one who's primarily in charge of making that decision. But no, I'm guided by them very much, but if I disagree, I will let it be known.
All right. These remarks also perhaps unsurprising. President Trump's foreshadowed these in the past as well. And of course, Jay Powell, even before the election, has made it pretty clear that he's not going anywhere and he just intends to continue doing his job. But look, this sort of argument isn't really going to go anywhere positive, is it? What's your view on where this is heading and what the implications for the bond market could be?
I actually think it could be a positive. If the president wants interest rate to go down, he cannot impose tariffs that could be inflationary, right? So at the end of the day, the direction of policy will be one that should guide inflation down so that the Fed can cut rates. And that's positive for the bond market.
But what about in terms of picking a fight with the Fed chair? This could get quite ugly.
Well, I think the U.S. still has an independent Fed, and that's not going to change anytime soon. As I said, the market and we are also focusing on what is being done rather than what is being said. And so far, the start of the administration has been pretty pragmatic, where a lot of the things that the market feared would come out in the first few days have not materialized.
Well, let's move across the Pacific to Japan, because, of course, we do have a rate decision today. Tightening's pretty much all but certain. What are the risks of not moving today, though, and do you see any risk of that happening?
No, I would think the risk of that is low, but at this stage, the impact of BOJ on emerging market currencies, which is really my main focus, is, I think, less significant than the direction of the dollar, or even the direction of the Chinese, CNY. So that, to us, is the biggest factor that is going to be the determinant of what's impacting Asian effects.
Well, let's talk a little bit about some news flow that we had out of South Korea this week as well. An intention to sell won bonds for the first time in 21 years, I believe. So there's a plan to issue about $14 billion worth. The intention is to stabilize the currency, boost growth as well. How effective do you think this is going to be, and what sort of demand do you anticipate?
Well, Korean won has actually performed well in 2025. It has obviously been weakened due to the political volatility. At this point, we think it's going to really be following the trend of the dollar, which is the case, I think, for most of the currencies across the world. In terms of what really has been rock solid in Korea has been the dollar-denominated debt markets. The corporates that issue in dollars in Korea, very, very high quality, and they are well able to withstand any short-term political instability.
So where are you seeing the best opportunities for the fixed income space right now in EM Asia?
Asia high yield dollar denominated debt. That's really has been our pick in Asia over the last year or so. It was one of the best performers, particularly China high yield last year. And we've liked that portion of the Asia high yield market. We think that will continue to outperform this year. It's a market that's become more diverse. It's a market where default rates are going down and valuations are still cheap relative to rest of the high yield fixed income market. So we think that continues to outperform.
I know you've got some views on the direction of travel for the yuan as well. I mean, it's very weak against the US dollar, but when you look at it against a basket against its main trade partners, things look a lot better there. What's your outlook there as uncertainty continues to swirl over the trade environment?
Yes, I mean, despite the fact that it weakened against the dollar, as you mentioned, right, it's done well versus its trade-weighted basket. So it's really the direction of what the dollar is going to do that's going to determine the direction of CNY. And the main thing here is not only the policy of the U.S. administration, but also the policy of the Chinese government in terms of stimulus and in terms of stabilizing the economy, where we think they are committed, and given their policies over a period of time, they will be able to stabilize the country and the housing market, and that's a positive for the currency.
All right, Shamaila Khan, Head of Fixed Income, Emerging Markets and Asia Pacific at UBS Asset Management. Thanks so much for joining us. Well, President Trump also earlier called for lower oil prices in his virtual address to world leaders at Davos. Crude immediately fell. It's not clear, though, whether OPEC's going to heed the president's call.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately.
A White House reporter, Stephanie Lai, joins us now from Washington. Stephanie, look, you can ask OPEC, but they've got their own reasons for production curbs. How are these words going to be listened to at all?
That's a great question. I think the message that President Trump was presenting to the world is something that he's been floating quite a bit on the campaign trail as well. He talks a really big game about being able to stabilize a lot of the conflicts going on. But I think the notable thing here is that President Trump's agenda is very much aligned with producing oil and gas at home in the U.S. And to ensure that it doesn't need to rely on foreign nations for this resource.
We've had another absolute barrage of executive orders today out of the White House, including an intention to change the rules around birthright citizenship. Already that's running into a few hurdles. Can you bring us up to speed on what's happening?
Certainly. Well, it does look like a judge had blocked that. It is an open question about what executive orders might or might land, and he's been introducing them at a very fast pace. Today alone, we were introduced to several topics on crypto, artificial intelligence, and digital assets. And so we see that he's making a splash every day by introducing new plans, new executive orders. The topic yesterday was on immigration. And so there's a lot of things that are happening at a very fast pace in Trump's White House.
Yeah, and a lot of the executive orders that we've seen signed have made good on some of the promises made on the campaign trail, particularly going to be satisfying to the base, a number of pardons there as well. But there's some tougher problems ahead. What action can we expect to see on some of these more difficult to solve issues?
Yeah, I mean, when it comes to the issue of executive orders, we're really going to have to wait to see what the courts do. His team has made clear that they're not really slowing down the pace. He has many more executive orders to go through. But I think what we're all watching in Washington is what ends up being a part of his legislative agenda, what will make it through the reconciliation bill, and among the promises that he made on tax cuts, what will actually make it into the bill. And of course, a big question of that is if they can legislate on tariffs, meaning if that can be considered an offset for their bill.
All right, White House and politics reporter Stephanie Lai there. Still to come on the Asia trade analysis on the Bank of Japan's policy path with State Street Global Advisors and Goldman Sachs, who both expect a rate hike today. We have much more ahead. This is Bloomberg. NATO Secretary General Mark Rutte is backing President Trump's campaign to get Russia to halt its war on Ukraine. Speaking to Bloomberg at Davos, Rutte also backed Trump's allies' calls for European allies to increase their military spending.
I hear many people here whining and complaining about Trump, and I would say the problem is not Trump or the US, the problem is Europe. The problem is Europe because at the moment we are not spending enough. Trump has also pointed when the US is supplying a lot of weaponry into Ukraine that we could pay more of the financial burden of that than we are doing currently. And he has always consistently been clear about the fact that he feels that we are under the US umbrella here and not paying enough for that.
Well, China has rebuked US Secretary of State Marco Rubio over his comments on the South China Sea. In one of his first statements since taking office, Rubio criticised what he called China's dangerous and destabilising actions in the disputed waters. Let's go to Beijing now. Bloomberg Greater China Executive Editor John Liu joins us now. John, Rubio is already under sanctions from China. These remarks have not been well received either. How's this relationship going to look going forward, and how is this vexed issue of the South China Sea going to be handled?
I think these comments by Secretary Rubio don't tell us too much about the direction that this relationship is going to travel under the Trump administration. Mr. Rubio has just taken office. He's spoken to the Philippines, he's spoken to Japan, to India, to Australia. So some of the United States' key allies in the Asia-Pacific region. And this is really to reaffirm the American commitment to defense in this region. With the Philippines, there is a mutual defense agreement. Mr. Rubio reaffirmed that in his comments. And also he did the same with Japan and India and Australia. So I think the main purpose here was to show that there is still an American commitment to this part of the world. I do think it is interesting that Secretary Rubio took it on him to do it so early in his term. He's just been affirmed as Secretary of State. So I think there is an underlining of the emphasis that Asia plays in this administration.
Well, as I've mentioned earlier, we've been hearing from President Trump on a whole range of matters today. One of them is seeking the assistance of China to help end the war in Ukraine. Now, consider China and Russia has what's been described as a no-limits friendship. What are the prospects of enlisting China's help in this regard?
I mean, Beijing and President Xi Jinping here in China definitely have a lot of sway over Russian decisions about the war. China has been the main economic ally that Russia has had. It's helped Russia overcome a lot of the Western sanctions that are in place against Mr. Putin's government. Whether or not Xi Jinping finally decides to put more of his weight into trying to get Russia to the table, I think we have to wait and see. And I think it will come down to ultimately how persuasive Mr. Trump can be when they have those conversations.
China's also having a little bit of difficulty in the European Union as well. The EU's resuming its case at the WTO over the economic coercion of one of the Baltic states. Why is this happening now? And we've seen China drop other economic coercion measures against other countries, such as Australia. So where are we heading with this?
Well, this is an unusual case for the EU because this stems from back in 2022 when Lithuania allowed Taiwan to open a representative office in their country. China found that Taiwan is an extremely sensitive topic for China. Lithuania accused China of putting in place trade sanctions to punish Lithuania for that action. The EU brought suit. But since then, those sanctions have been dropped. And so there's a problem. If the EU continues with the suit, it may not have the evidence to win the case. But if it drops it, there is also the risk that, one, Lithuania wants to continue with the case. And also there is this risk of how will the Trump administration react to the EU dropping its case. And so the EU is really playing for time at this moment, trying to figure out what it should do and waiting as best as it can.
All right, Bloomberg News executive editor for the Greater China region, John New there. Let's take a look at how the oil price is moving, because, of course, we've had some rhetoric from President Trump around that today as well. New York crude looking a little bit softer right now. Trump telling Davos that he's going to ask Saudi Arabia and other OPEC nations to bring down the cost of oil. And this is aligned with his intention to domestically drill a lot more. Trump saying if the price came down, the Russia-Ukraine war would end immediately. I'm not sure that OPEC Plus is really feeling terribly motivated to say yes to that request, but we shall see. More ahead on the Asia trade. This is Bloomberg. This is the Asia trade, the latest from the corporate front now. JP Morgan boosted CEO Jamie Dimon's pay last year to $39 million as the lender posted a record-breaking annual profit. Dimon's pay jumped about 8% from the $36 million he earned in 2023. JP Morgan made close to $60 billion in profit last year. Dimon has run the bank for almost 2 decades, and questions are growing over whether or when he will retire and who will succeed him. President Trump surprised Bank of America CEO Brian Moynihan in his address at Davos, accusing the lender of limiting business with conservatives. Trump was speaking virtually at the World Economic Forum, where Moynihan quickly changed the subject. The bank later issued a statement saying it never closes accounts for political reasons and doesn't have a political litmus test.
I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. They don't take conservative business. And I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
More from Wall Street's big banks at Davos. Morgan Stanley CEO Ted Pick says the industry's on the cusp of a surge in deal activity, pointing to pent-up demand from private equity firms.
The vernacular of whether we're really moving with animal spirits is whether we see a bunch of M&A prints. Like, where are those M&A announcements? And the reality is, over the last number of years, we've had, I think, two major uncertainties, right? The end of financial repression, 0 and 0, is that finally passes? And do we kind of know where rates are going to be? And we can focus on the detail of whether there'll be, one or two moves or none at all. But at least we generally know that for the next period of time, the U.S. risk-free rate is somewhere in the mid-4s. And then you can apply discount rates for country risk and the company and the rest of it. So that's kind of past us. So that's an uncertainty that's taken off the table if you're a CFO and you're in a boardroom. The second set of uncertainties has been around sort of the end of history, which is the resumption of nation states and the like. And one could argue, well, there's a lot of uncertainty in the world. I would argue the combination of having some sense of a rate framework and having some sense that things are going to happen in the U.S., in Europe, around the world, I think it galvanizes the corporate community. And so the question is, how much is the market discounted that? How fast will that be? And I do think important catalyst to this will be there are the better part of 1,900 companies in the private equity space that have $1 billion of aggregate value, 5 years of life on average. Those companies need to move. So at some level, I couldn't tell you exactly the pacing of that activity, but we've been below trend line in the M&A market. We talk a couple of years from now, I think we'll be a trend line or higher. I'm pretty confident about that.
You think it's going to be M&A? You think it's going to be IPOs?
I think it'll be everything. I think we've been talking about, you've talked about so much the sort of paucity of investable names, especially when you get past the big 7 companies and they're sort of small cap orphans without research. I think there's yes, it can be painful, Starbucks, for a young company to be public, but you get enduring long-term value from shareholders that actually can also add some value, and you can use that currency to make other acquisitions. I think the IPO product is alive and well.
Morgan Stanley CEO Ted Pick there, speaking exclusively with our colleagues Lisa Abramowicz and Jonathan Ferro from the World Economic Forum in Davos. Other stories that were following: Boeing reported a fourth quarter revenue that missed analyst estimates after last year's bruising strike that idled most of its aircraft production. Preliminary results show sales were about $15 billion, with a loss per share of $5.46. Boeing took a hit of more than $1 billion as charges tied to the strike, and expects another $1.7 billion impact from troubled defense programs. It reports full results on Tuesday. Korea Zinc's CEO Yoon-bi Choi has retained control of the company after an emergency shareholder meeting was called to head off a takeover bid by its top investors, Young-poon and MBK Partners. The meeting resulted in key changes, including a cumulative voting system. But the outcome remains uncertain, as Young-poon and MBK plan to challenge the voting restrictions in court. Well, let's take a look at some of the stocks that are moving here in Australia. Rio Tinto is a little bit softer. It has warned that shipments of iron ore could be impacted this quarter after tropical cyclone Sean flooded a railcar dumper at Dampier Port, might put it out of action for 3 to 4 weeks. We have more ahead on the Asia trade. This is Bloomberg. All right, let's get some breaking news out of Japan. It is CPI numbers for December, and it's a beat on the headline number, 3.6% acceleration on year. The expectation was for 3.4%. However, once we start stripping out some of these volatile factors, things settle down a little bit. CPI excluding fresh food and energy comes in at 2.4%, and that is bang in line with expectations. But once those factors are included, the headline number of 3.6%. Not a lot of movement of the yen. It has just pushed through that 156 barrier, but of course we are setting up for that Bank of Japan meeting a little bit later on today. Well, Tokyo economy and government reporter Erika Yokoyama joins us now. So Erika, let's talk first about those CPI numbers. As I mentioned, a beat on the headline, but more in line when we take out volatile factors. What's the implications of this for the Bank of Japan later this afternoon?
Sure. So Japan's key inflation gauge, which is the inflation excluding prices excluding fresh food and energy, hit 3% for the first time in more than a year. Looking pretty strong, I think it will push the BOJ to proceed with rate hike as pretty much expected later today. It's true that the strong figure is partly driven by the policy factor as the government suspended the utility subsidy and pushing up the energy prices. However, looking at the underlying trend, it also points to steady growth of prices as well. Like BOJ actually has already ticked off boxes for rate hike as it's so pretty positive development over wage as well as the relatively calm start of Donald Trump's second term. So I think today's data, it just offers an additional green light for the BOJ for moving forward.
Yeah, the expectation firmly that we will see further tightening today. But you did mention the trend there. How sustainable is the inflation picture in Japan now, particularly considering that there's a few unknowns around the trade environment brewing for 2025?
Exactly. But I think the inflation momentum will last for some time for a couple of reasons. The first thing is, as I just said, wage negotiations so far has been progressing pretty positively. So I think higher labor costs will feed into higher prices going forward. And another thing is the persistent weakness of the yen. And yen has been trading at 155 per dollar or weaker for about a month. And actually, it already has led to higher import costs, according to other data from BOJ area. So I think if BOJ decides not to raise interest rate today, I think it will bring the huge pressure on the yen. But even if the BOJ does rate hike today, I think the yen will remain quite weak. Then I think it will probably give a reason for the BOJ to consider the next rate hike sooner than later.
Yeah, certainly. Most traders do seem to be looking ahead to what happens next. But I want to talk a little bit about the political implications, if we can, as well. How much of an issue is Japan's inflation picture for Prime Minister Ishiba?
I think it's a headache for Prime Minister Ishiba as well. Actually, today is an important day for Ishiba as well, as the Diet session restarts later today to discuss the initial budget. And Ishiba's minority coalition needs to pass the initial budget for the fiscal year starting from April by the end of March, of course, after holding intense discussion with opposition party. I think inflation persists at this level. I guess opposition party will become pretty demanding as they want to be seen as helping people. So I guess Ishiba wants to keep prices and inflation under control, especially before the upper house election coming up in July.
All right, Tokyo economy and government reporter Erika Yokoyama there. Well, Japanese markets are, of course, going to open at the top of the next hour. We've got futures just turning slightly positive at the moment. Not a lot of action on the bond or currency space either. We have just seen the yen push through that 156 barrier, as I mentioned. But the expectation is very firmly that we will see tightening today to the tune of 25 basis points. Well, Asia equities reporter Winnie Su joins us now for a preview of today's open. Winnie, what are we going to expect to see in the equity space today in Japan?
Yeah, it sounds like today is going to be a pretty muted open. Like you mentioned, Paul, we've got the indexes, both the Nikkei and the Topics, rising for 4 days straight already. And now that the market is pretty much pricing in a 25 basis point for the Bank of Japan to raise rates, that's already within market expectation. So even when we've got like the better than expected CPI, that's just going to support that view of rate hike. So we might actually see a little bit of profit taking if these just goes as expected. However, one thing to flag is that people will be watching more closely the guidance for the Bank of Japan in terms of how the tone comes out, whether it's going to be on the dovish side, which is going to push the yen further weakening and hurt some of the domestic stocks, but supporting the exporters, or be on the more hawkish side, which is going to strengthen the yen, but also support the financial names. So we've got strategy notes from IG just this morning saying that it might be on the dovish end, especially considering the macro economy in the U.S., the macro situation in the U.S. remains quite uncertain at this point, and also we would like to see more specifics on the wage data to come.
Well, we saw the Nikkei put on about 10% last year, give or take. What's Japanese stocks' outlook for this year versus the rest of Asia, particularly emerging Asia, China and India?
Exactly. So right now, Japanese market is actually looking like it's in a bright spot. Just like you mentioned, I was just checking the data earlier today, and we saw that since Trump got elected in November, Japanese stocks actually outperformed overall Asia market, including China and India. So when you look at the Asia emerging market space, we saw lots of outflows from Taiwan, from Korea, because of the stronger dollar and because of the threats around the U.S. tariffs, pressuring these countries that rely a lot on the U.S. exports. And turning our focus onto China, we saw the CSRC announcements yesterday not really helping market sentiment, as people are expecting to see more fiscal stimulus to feel more comfortable about the economy in the country. And with India, because of the weak consumption and the weak earnings perspective and that higher valuation overall, people are actually still quite hesitant to put more money in. So when you compare Japan with these other Asian peers, it looks like it does look quite attractive for the time being.
Well, let's talk about the news flow out of the White House so far this week. It's really been something of a fire hose of announcements and still uncertainty remaining around the tariff and trade picture. How are we seeing traders hedging and positioning around what might happen?
Yes, so U.S. tariffs is definitely one of the key topics on investors' mind, especially in Asia, whether it be the 10% tariffs on China or 60%. But the key point is how they would hedge for that volatility or for any tariffs to come. So we're hearing more investors shifting money into the domestic-oriented names across Asia, be in Japan, especially in the financial names, because of the potential to further hike rates, or even in the travel stocks, because we saw that the weak yen really helped this sector in the past few months. And looking at China, when we talked to fund managers yesterday, they were talking about hiding away from U.S. tariffs, which means looking into consumption area, but specifically for the down trading part. That's what East Spring's fund manager was telling me. But also the high dividend yield stocks were a bright area, as well as the self-sufficiency names that can benefit also from potentially the domestic policies to come to support the stimulus. And within India, people mentioned the India IPOs actually being a bright spot, and reshoring is actually another topic. So Thailand, Malaysia, these countries can benefit from their supply chains if companies are going to shift away from the manufacturing sites in China to these Southeast Asian countries.
All right, Asia equities reporter Winnie Su there. Still to come on the Asia trade, we're going to get analysis from State Street Global Advisors and Goldman Sachs as we continue to look ahead to the BOJ's decision in the coming hours. And subscribers can also turn to the Bloomberg for more on this. You can go to TLive Go, TLIV Go, to get commentary and analysis from our expert editors. We have more ahead on the Asia trade. This is Bloomberg.
AI is not slowing down. So we need to think about how do we build this in a more collaborative way.
Today, there are a lot of companies who are deploying AI in digitization, in their tech solutions.
The U.S. is ahead in models. The West is ahead in chips.
As more and more reasoning thought is done by AI, we're going to more and more see, reasoning that's like super persuasive, but might have really subtle flaws in it.
It's going to take decades to actually be rolled fully to enterprises, rolled fully to the way we actually behave and the way we actually deal with computers.
And I polled people in Norges just before Christmas when I asked them, how much more efficient are you now because of the new tools? And on average, people thought they were 15% more efficient.
Business leaders there on the AI outlook at the World Economic Forum in Davos. President Trump has criticised the European Union for targeting American tech companies like Apple, Google and Meta, calling it a form of taxation. For more, let's bring in Bloomberg Senior Executive Editor in Technology, Tom Giles. So, Tom, a lot of rhetoric here from President Trump in terms of the EU's approach to some of these US tech giants, but what pressure might we see him actually apply on the EU?
Well, he's starting with the bully pulpit, right? He had a captive audience at Davos today where he made those remarks. Remember, this is a president who is threatening tariffs with countries and regions around the world. So one of one of the things he can do is use tariffs. He's also putting pressure on various parts of the world in terms of, using bigger parts of their GDP to fund their defense. I'm not saying he's going to directly tie policies around tech companies to NATO, but this is a president who prides himself on what he believes is his ability to negotiate. And so he is, taking these first couple of days in office to send a really strong signal to various people who and regions and countries and individuals and companies who he believes are doing wrong by the U.S. or by U.S. companies or against conservatives, right? He took aim, this isn't just foreign companies and foreign countries. He took aim at some of the biggest banks in the U.S. and saying that they're discriminating against conservatives. But to get back to the tech companies, I mean, these are some companies that Trump himself has had mixed relationships with. He sparred with Google and Meta in his first administration, criticizing them for being discriminatory toward conservatives. Now, you've seen both of those companies in various ways in recent months as it became clear that Trump was going to become the president, changing their tune and being much more conciliatory toward the U.S. president elect and now sitting U.S. president, including things like Mark Zuckerberg, adding conservatives to his board, elevating conservative voices within his management structure, forking over money to the inaugural celebrations for the president. Lots of ways that Mark Zuckerberg is trying to show that Meta is open for business and wants to work constructively with this administration in ways that they were criticized for not doing in the past. You're seeing positive overtures from the people at the top of Amazon, for example. It's been very well documented and discussed much on Bloomberg television, the ways that Elon Musk is working very, very closely with the president, has been called a co-president with Donald Trump. So the tech industry is really working very, very closely in different ways, cooperating with, supporting this presidency. And you're seeing the payoff in remarks like the ones that he made today at the EU, telling the EU that they're being too hard on U.S. companies, calling it a taxation. Whether it's the steps that they're taking on tax breaks for Apple in Ireland, they got a big tax break and they're having to pay billions and billions of dollars. He says that's not acceptable. He's worried about what they might do on content moderation. He's worried about what they might do in terms of antitrust behavior. And this is the things that the EU has developed a reputation for many, many years, which is being tough on big tech from the U.S.
Well, Google and Apple are also coming under some pressure as well from India, which wants to see more of its apps in their app stores. What's India asking for exactly? Right. And I understand there's a bit of pushback from Google and Apple over this. Why is that?
Right. Really interesting developments in India brought to us by my colleague Sankalp in Delhi. The Indian government wants to make it easier for citizens to access this government app, the public services that are available in this all-in-one app. And Google and Apple are pushing back on that. These are two companies that are very strict about what gets onto their app stores. They're concerned about security. They're concerned about a whole host of things, reliability, and they scrutinize everything that goes onto those apps. They are letting Indian government applications onto their app stores, but they're doing it in an individual or piecemeal way. Indian government wants to make it more accessible and all-in-one app, removing some of those kinds of restrictions that Apple puts on them, for example, talking about this is not from a trusted source, things like that. They want that access to be they basically want their service to be more accessible on the app stores, and that's what Google and Apple are pushing back on. So Indian government called in executives from both of those companies recently, and they're getting a lot of pushback. The question is, what does India do in response if Apple and Google continue to say, no way, not in the format you're looking for?
All right, Bloomberg Senior Executive Editor in Technology, Tom Giles there. ByteDance says it's exploring options to keep TikTok running in the US without selling its operations. ByteDance board member and General Atlantic CEO Bill Ford told us he's optimistic about finding a solution, citing a constructive environment and a rich pipeline of deals in the sector. TikTok's parent company was given 75 days to come up with a solution after President Trump signed an executive order extending the deadline for a sale.
I think there's a number of alternatives that we can talk to President Trump and his team about that are short of selling the company, that actually would allow the company to continue to operate, maybe with a change of control of some kind, but short of having to sell. I'm optimistic about the dialogue that's emerging between President Trump and President Xi, and that might help create a much more constructive environment, a much higher level of engagement that could lead to a positive solution.
Let's take a look at some key crypto assets as well, because among the executive orders being signed by President Trump, we had some actions related to cryptocurrency. A crypto order creating a working group to advise the White House on digital asset policies. The report expected within 6 months. A little bit of disappointment among the crypto community there because it didn't specify Bitcoin as a centre of a national reserve. We've got more ahead on the Asia trade. This is Bloomberg. All right, let's take a look at how Japanese assets are tracking ahead of the open. We did, of course, just have those CPI numbers. Inflation ex fresh food hitting 3% for the first time since August 2023. The yen a little bit weaker now, 156.17. Nikkei futures now pointing to a positive open. And of course, this happens on the eve of the Bank of Japan meeting. Happens in a few hours' time, and the BOJ widely expected to lift its key rate today. And that might help turn equity investors' attention towards property developers. Bloomberg Senior Asia Stock Reporter Hideyuki Sano has more on this. So, Hideyuki, what's the main attraction of property stocks?
Good morning, Paul. Let me start with a small tidbit. So the best month for Japanese real estate stocks recently was last March. If you remember, that was when the Bank of Japan ended negative rates, and they had a spectacular return on that month. So probably that is because investors have sold property stocks beforehand, because the textbook theory is that they are one of the most vulnerable sectors to higher interest rates because they typically have a large amount of debt, and also a higher interest rates are generally speaking negative for anyone who wants to buy properties. I think it's fair to expect us unwinding of that sort of trading. But if we look beyond that, I think fundamentals are also quite supportive for real estate stocks because, yes, the Bank of Japan is going to raise interest rates today, but what's the new policy target? It's 0.5%. If you look at the US, the policy target rate was 5.0% just several months ago. Interest rates are really at low levels, and we just had a CPI showing 3% inflation. And if you look at long-term bond yields, in Japan it's 1.2%. It's easy to forget that Japanese bond yields are still below Chinese bond yields. And in China, there's almost no inflation. So all of this means that basically real interest rates are extremely low. So that is very supportive of property stocks in Japan.
Yeah, so how is the property market in Japan doing more broadly? What's the outlook for this year?
Yeah, basically the market environment seems very sound. If you look at the vacancy rate of the Tokyo office market, it has been falling steadily over many months. So it's a very different environment from places like New York, where the market landscape has changed quite dramatically after the COVID. And when you talk about property markets in Japan, there's always issue on demography. And it is true that in some small cities, there's falling population and there are lots of vacant office space. But in Tokyo, the population has been growing, and it's very good environment for many companies.
All right, Bloomberg senior Asia stock reporter Hideyuki Sano there. Let's take a look at the two-day yen as we look ahead to that meeting. Mizuho saying we might see the yen weaken anyway. If we get a hike today, might not be another one for 6 months. Market opens in Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as investors still digesting President Trump's comments in Davos, demanding lower prices of energy, not to mention lower interest rates, accusing the European Union as well as banks of unfair practices. But of course, the attention now, Paul, shifting to Asia as we do head towards the Bank of Japan policy decision.
Yes, that's right, Shery. We are expecting to see tightening today. And one interesting thing to watch, of course, is going to be the yen reaction as well. It may continue to weaken even though we get that expected 25 basis points. Mizuho Securities survey suggesting, well, we might not get more tightening from the Bank of Japan for another 6 months.
Especially given that 25 basis points rate hike for this Friday has already been almost fully priced in by the markets, right? So will we see a case of sell the news is a key question. And this as we're getting the latest from Singapore as well. The Monetary Authority of Singapore now coming out with its own decision, seeing 2025 CPI, all items inflation between 1.5% and 2.5%. But most importantly, keeping the center of the currency band. The expectation was for Singapore to ease policy by reducing the slope of the policy band, but we're now seeing that they're actually keeping the center of the currency band. They're now seeing core CPI moderating more quickly than expected. Of course, remember, we did get that data earlier this week from Singapore with the key inflation gauge cooling to the slowest pace in 3 years in December, which is why there was some expectation that perhaps we could see a change in their monetary policy. So right now, Paul, Singapore Central Bank easing the currency policy, but keeping the currency, the center of the currency band at the moment.
Yeah, a slight reduction of the slope of the policy band, as you mentioned. We're also getting growth remarks from the Monetary Authority as well. The MAS saying growth momentum is expected to slow this year, sees GDP growth at between 1 and 3% for 2025. So that is consistent with a modest, gradual appreciation path of the Singaporean dollar as well. So the width unchanged, the slope changed slightly, Shery.
Yeah, we are seeing the Singapore dollar now weakening with that decision coming from the central bank. And of course, another central bank that we'll be watching very closely today, the Bank of Japan. We have seen the Nikkei gain for the past 4 consecutive sessions. We're seeing the Japanese yen holding steady at that 156 level against the U.S. dollar. And this as we continue to see speculation that we might get the 3rd rate hike under Governor Kazuo Ueda, the first move since July. And remember, back in July, we had that huge market reaction after the rate hike with the carry trades being unwound by investors, really causing mass chaos across global markets. This time around, we have gotten signaling both from Governor Ueda and the deputy governor, so the expectation right now is for a hike. Take a look at how the Kospi is coming online as well. This, as we are now seeing 0.4% gain in the Kospi. The Korean won holding steady, a little bit of weakness against the U.S. dollar. Of course, we continue to digest all of the headlines coming from Davos. The Korean economy itself has been really struggling with inflation data missing, GDP data missing this week, and of course moves to stabilize the currency by authorities with special bonds of up to 20 trillion won to be issued from this week.
We've been trading here in Australia for a little bit over an hour. Let's see how we're tracking. The story is mostly risk on. We're up about 1/3 of 1% on the index. One sector that's lagging a little bit, though, is materials. That's off by 1/4 of 1%. We've got the major miner Rio Tinto off by 1/2 of 1%. Rio saying a little bit earlier that the tropical cyclone that passed over Western Australia last week flooded a rail car dumper. This is a piece of equipment used for emptying cars full of iron ore. That might be out of action for 3 to 4 weeks, so could see an impact on production there. Not a lot of change to the Aussie dollar. We're seeing not a lot of movement in yields either. Earlier we did see yields on the 10-year advance modestly. We do, of course, have a Fed meeting next week as well, but we heard from President Trump earlier on a range of subjects, among them wanting lower taxes and lower rates, not just in the US, but everywhere, and already early signs that he's going to pick a fight with the Fed, Shery.
And we're watching the Singapore dollar as well, of course, after the Monetary Authority there just eased policy for the first time since 2020. They have just announced the reduction slightly of the slope of the policy band, but keeping the width of the policy band and the level at which it's centered. Let's bring in Avril Hong for a check of the markets. And Avril, just give us your reaction right now to the latest coming from the central bank, which was pretty much expected by economists.
Yeah, the majority of economists saw this reduction in the slope of the policy band, no change to the center and the width. And I suppose this is a bit of a less aggressive move versus if they had adjusted the center of the band. And as you know, Singapore adjusts monetary policy a bit differently from the rest of the world, which does it via interest rates. So the center, the width, the slope, and it's tweaking it accordingly. So what we're seeing today is significant because after more than a year of leaving settings unchanged, tight stance, it's pivoted to easing, but I think this was by no means a very clear-cut decision. Even though it was more or less expected, there was still actually a handful of economists that expected no change because of the uncertainties from Trump, tariffs, inflation. That being said, when you look at inflation in Singapore, it has been quite benign. It's at a 3-year low. It's come comfortably below the 2% level. But the focus, I think, now is really on the growth side of the equation. While it was resilient last year, the prospects for this year look weaker. Singapore, as you know, is a very trade-dependent economy. And, you know, we saw at the peak of the trade war, 2019 growth levels were the lowest in a decade. And Singapore was among the economies that were hit when the US and China went toe-to-toe. This time around, Singapore's trade deficit with the US might mean it won't be singled out by Trump, but if its major trading partners get affected, there are likely to be ripple effects. If the Fed keeps policy tighter, that could also crimp investment here in Singapore. So for the first half of the year, household spending, along with investments, that's expected to be muted. So this move today by the central bank to kind of slow the pace of appreciation of the Sing dollar to boost exports, boost growth as well.
So we are seeing the Singaporean dollar appreciate there, and allowing it to appreciate is going to continue to blunt inflation. So what can we say about the outlook for the currency this year?
Yeah, we're seeing a bit of weakening on the Sing dollar after the decision. For Sing, it's really been king the past couple of years as the tight stance has meant it's outperformed in the region versus many of these other Asian peers. But more recently, it has underperformed following the US election. And it has also, been seeing how traders brace for this MAS pivot. So that's also led to some weakening. Quite recently, it was not far from the 138 levels, which were roughly the 2-year lows. For the further path of the Sing dollar, I think it's really dependent on these signals of easing. The growth, inflation outlook, that looks to be slowing further. So signals of further easing maybe down the line from the MAS. We have the likes of BNP Paribas expecting 1.4 dollar Sing over the course of the year.
All right, thanks very much, Avril. Avril Hong there in Singapore, keeping track of that Monetary Authority of Singapore decision. Let's get to Garfield Reynolds now, leads our Markets Live Asia coverage. And Garfield, another great day for US equities, pushing higher again to another record, tech leading the way again. At what point does this rally start to look a little bit played out, or is there much more to come?
Well, I think there is potentially a lot more to come, Paul. But I mean, the AI is the extra sauce, as it were. But the meat of the reason for the rally is the strength of the US economy. Now, what we're looking at the moment is mostly, the US economy before the impacts from what the incoming administration may or may not do. Now, along with that, there's been a significant boost in sentiment for businesses. That's because although there's not a lot of clarity about some of what Donald Trump may ultimately do when it comes to tariffs, for example, the extension of the corporate tax cuts, the push for more tax cuts, and the push for lower regulations, those are all very much in play. Those are all seen as being business friendly. There's a perception, perhaps, that a lot of, the businesses that are being surveyed in business sentiment surveys tend to, as it were, tack Republican. It's not that they're all Republicans, but for them, a pro-business Republican administration, with or without Donald Trump at the head of it, sounds like something that they can appreciate. So that's all working in favour of US stocks. There's also the feeling that, we remember from last time round that Donald Trump very much saw the stock market as a barometer of his presidency. So there's perhaps some complacency built in there, but perhaps it's fair enough that, if what he is doing starts to bring the stock market down, he will change course. And we know he's always capable of changing course. So all of that is looking like a reason for US equities to keep going. And sure, they remain overvalued on standard metrics, but they've been overvalued on standard metrics for quite some time. And with some rough patches here and there, the uptrend has been pretty strong. Most people expect that to stay in place for some time to come.
Garfield, is the strength of the U.S. economy also a key reason why we continue to see yen weakness? Because even today, very counterintuitive, but expectations are of a rate hike, but the fact that we could even see weaker yen going from here.
Yes, Shery, that's the strength of the US economy and therefore the still wide yield premium that US assets have. That's an obvious reason. There is also, as I said, some of the tariff concerns have taken a step back, but they're still lingering there. And Japan, as a very trade-exposed economy, that's seen as a potential drag for it. I think more importantly, this is really what the BOJ kind of wants to achieve. We had some talk earlier about the idea that last time they hiked, which came along with when Japan decided that it needed to intervene to stop the yen from going much further, all of that led to a very rapid yen gain that caused a carry trade unwind that did lots of damage to shares in Japan and beyond. So with that somewhat scarring experience behind them, it looks very much like the BOJ wants to be carrying out a dovish hike. It sort of can't not hike after it's made it so clear it's going to, and given those depreciation pressures that are still there for the yen. If it doesn't hike, you could see the yen go past 160 in the flash of an eye. But they also don't want to see the yen turn around and gain strongly. And I would argue that a BOJ meeting where they hike, but the yen declines about 1% or so at most, that's probably pretty much ideal, because the expectation would be that then, as the fact that they have actually hiked seeps through, if the data continue to move in the right direction for them, then the yen will stabilize and start to get a bit stronger, but they don't want to see it really motor. And that's what they had in July, and we saw what happened then. Plus, Governor Ueda is obviously by nature a very gradualist governor.
Yeah, I do wonder how they're really considering the political ramifications, of course, of a 2-week yen at this point, right? Godfrey Reynolds, who leads our Markets Live Asia coverage, of course, with a look ahead to the BOJ policy decision and the market implications. We'll get more analysis on all of this from State Street Global Advisors as well, not to mention Goldman Sachs a little later as we look ahead to the BOJ's decision in the coming hours. More ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese assets are setting up for the open. The Nikkei, of course, gained for 4 consecutive sessions now. 5th consecutive session today, up higher with the Japanese yen holding at that 156 level against the U.S. dollar. The expectation today, of course, is for that rate hike to come finally for the first time since July from the Bank of Japan. Joining us now is Masahiko Liu, senior fixed income strategist at State Street Global Advisors. Masahiko, great to have you with us. So is the landscape now finally set for the BOJ to be able to make a move?
Sure. I think, it has been pretty sanguine in terms of Japan. For BOJ, they are way behind the curve, I think, right? And then the landscape was set since last year, right? The first rate hike was in July. I think if everything were okay, they wanted to go in December too. But back then, everything is very political in Japan, right? They didn't have the political cover yet, and there was not a very functional established channel of communication with the PM office, the Ishiba administration, when they came in office in October, 2 months into the role. And in January, we had a political cover from the Ishiba administration. I think that's why BOJ decided to go at this
politicians
meeting.
will be hard-pressed to not see a 2-week yen, given how households are feeling the pain, right? But at the same time, will we see a rate hike and then see more yen weakness given the strength of the U.S. and everything that's happening globally?
There might be a potential, scenario that you painted out, but I think, I think 160 was probably the center line that they have drawn in Japan, right? So it's pretty obvious when it gets to 160, even Mr. Akazawa, which is the economic minister of Japan, right? He's a close aide of Ishiba prime minister. He has came out and voiced some of that, making some noise regarding that too, right? I think on his back of the Ishiba administration, they are worried of excessive weakness in yen. That's why we have this political cover for BOJ to go hike at this meeting.
Masahiko, we've seen a little bit of volatility in currency markets. How important is carry when you're looking at opportunities in fixed income right now?
In fixed income or currency, sorry?
Well, how important is carry when you're looking for opportunities?
I think carry is very important, right? I mean, like, US dollar being the strongest currency now is because of carry and also, risk of asset, right? Japanese yen used to be a safe haven, but with everything out-yielding Japanese dollar, right? Yen, sorry. That's why yen has been so excessively cheap. But going forward, I think, versus dollar, it's going to probably stay between 150, 160 range, but versus other, DM currencies, I think that's, room for Japanese yen to appreciate from here, right? Especially cross yen, when there's diminishing carry into, a cutting cycle of other major central banks like, pound, I would say pound, Swiss franc is one of them, and also euro. I think yen has potential to appreciate, and being the safe haven, re-establish itself as the safe haven currency, just asset, just behind US dollar and gold.
Do you see some risks in Japan from the uncertain political landscape as well? Prime Minister Ishiba's struggling a little bit in terms of his popularity.
I think there's always risk, right? And he has lost the simple majority. LDP has lost the simple majority back in October, lower house election. I think market is not really priced in, the potential volatility in terms of politics in Japan into the next upper house election in July. We might see a bit of volatility in that terms as, Ishiba-san, his approval rating is not as high, and also, the potential failure of his administration to actually address the discontentment of the public in terms of fiscal spending in Japan. So I'll keep an eye into, the next couple months, because if anything, if they were to change the top person to represent LDP, it will be the next several months before the upper house election.
More broadly, when it comes to Asian fixed income, what are you seeing in terms of opportunities? Because even yesterday, we heard more measures coming from China in order to support the markets.
Things from China, I think, drawing from a Japanese experience, JGB experience, I think China, the starting yield is very low, but sure, Japan had that for a very long time. We think we favor China's government bonds, CGB, and we think that, hedging back to US dollar makes sense for investors in terms when you look at the long-term risk-adjusted return. Volatility is going to be a lot lower versus US Treasuries or its peer, and it's pretty attractive as an asset. But in general, as outside of China's Asian fixed income, high beta fixed income, we think that, with US growth being very strong, US exceptionalism leaving, its mantra, I think, that translate into a higher real yield and higher US dollar, stronger US dollar, is generally not a very great formula for, Asian fixed income in general, or emerging markets, local currency.
Masahiko, good to have you with us on BOJ Day, senior fixed income strategist at State Street Global Advisors. You can also turn to your Bloomberg for more on this. Go to TLIV Go to get commentary and analysis from Bloomberg's expert editors. We will bring you BOJ Day live. And right now, we're also following the market moves with Mitsubishi Motors shares falling by the most since August 5th. Remember, that's during the broader global market meltdown that we saw here in Japan as well. And this on news coming from Yomiuri Shimbun that Mitsubishi is leaning towards not joining that expected Nissan-Honda merger. We're seeing some broad downside pressure across automakers. This is Bloomberg.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately.
As President Donald Trump, they're urging OPEC to lower oil prices. And oil prices did fall after President Trump told the World Economic Forum that he would push Saudi Arabia and OPEC for cheaper crude. Let's bring in our senior energy reporter now, Stephen Stapczynski. Stephen, OPEC Plus has got its reasons for controlling supply. It's interested in supporting prices. How likely are they to listen to this type of rhetoric?
I mean, I think, when it comes to Trump and when it comes to the geopolitics of Trump, it's quite unpredictable. I think if you looked at everything on face value, it's unlikely that OPEC Plus is going to change their course. They're planning to add barrels to the market later this year after delaying several different planned hikes. So for them to suddenly come around and change because of a request from Trump would be surprising, I think, to the market. Now, that being said, he's been able to pull this off in the past. And his first term, he was able to come and make an agreement between Russia and OPEC to cut production to help boost prices when things were quite low in 2020 in the middle of COVID. Now, coming again, the market is quite different. OPEC Plus, Saudi Arabia, they want prices higher. While they won't clearly admit it, it is much better for Brent to be around the 80, 90 level for Saudi Arabia's budget than lower in the $70 or $60 range. In fact, it's also good for U.S. shale and oil drillers. But for Trump, he's clearly focusing on one thing, and that's inflation, and that's gasoline prices. And if the consumer is seeing higher prices at the pump, then that's something that Trump is going to push for. So we'll see what happens going forward.
Just quickly, Stephen, what are the key considerations for the energy market this year, given, of course, the geopolitical landscape as well?
I think another thing to look at is also natural gas. Trump is also pushing countries and regions. I mean, he's pushing the European Union to buy more natural gas from the United States, or else he threatened tariffs. So I think natural gas and the way that Trump uses natural gas to leverage across, as a geopolitical tool, will be an interesting thing to watch. The world is the biggest LNG exporter, and Trump is in control.
All right, Bloomberg senior energy reporter Stephen Stapczynski there. We have more ahead on the Asia trade. This is Bloomberg.
We're getting the latest Jibun Bank Japan PMI numbers for manufacturing coming in at 48.8. And remember, this has been in contraction territory since July of last year. Still, the broader composite, 51.1, the preliminary number for January. So we're back above that threshold of 50 in expansion territory and improving from the previous month. Service is also improving. The January preliminary numbers coming in at 52.7. The previous month, we were barely at that threshold of 50. But, of course, we continue to really look at all of the data coming from Japan, including the fact that core inflation just hit 3% for the first time in 16 months as we head towards a Bank of Japan policy decision. Today, let's bring in Tomohiro Ota, senior Japan economist at Goldman Sachs, who expects a 25 basis point rate hike. Great to have you with us. So why are you making that call?
Yeah, so basically that's BOJ has maintained two important messages in the last couple of months. The one is that they want to see the momentum for the Shunto wage hike. The Shunto is the most important leading indicator for 2025 wage growth. And the second thing is they want to see the better visibility of the U.S. economic policies. And so far, in the last few weeks from the data, then we have anyway from the expected from the beginning that wage growth momentum is fairly strong. So, and it turned out to be correct. And also that we have just seen that in the last few days that the U.S. economic policies are getting shaped to some extent.
Yeah.
So that both of these cements the way toward the 25 basis point hike today.
At least we didn't get tariffs on day one. I guess that's a big relief for a lot of markets. We have seen a little bit of stabilization and record highs again when it comes to stock markets. Although the inflation wage momentum, for example, could we see a change in their economic outlook?
So basically that we expected the one-notch upgrade for the new core CPI, which excludes the fresh food and energy, mainly because of the rising inflation. And maybe a tip of some yen depreciation has a positive contributor. Is a positive contributor. So that's something we expect to see in the BOJ's quarterly economic outlook, which will be released today.
How much more tightening do you think we're going to see from the Bank of Japan in 2025? And to what degree is this going to be dependent on what happens with the picture around the US and trade and tariffs?
Yes, so first thing first, we expect BOJ will maintain the 2 rate hikes a year, so in January and July. So, but of course, it depends on the situations. So on tariff point, what we are really worrying about is that the U.S. government would target Japan alone for some specific tariff. So in 2002, more than 20 years ago, President Bush imposed a tariff on our steel products and by roughly 30%. And then it was immediately followed by the 40% loss of our steel export to the United States. So such kind of targeted tariff is a kind of big risk for the Japanese economy. That's if not, like the universal tariffs, penalizing everybody equally, I don't think we have the big negative impact for the Japanese economy, and then we can maintain some decent kind of rate hike path going forward.
Are you able to say with any confidence where the ceiling for rates might be in Japan?
Basically, we think that we see those ceiling is a bit higher than the market consensus because we expect that the terminal rate is 1.5%. So this is mainly because that we are fairly sure that the service inflation is picking up going forward, and which strengthen the momentum for the more sustainable inflation. And of course, the wage growth will go in tandem. So that's why we do not expect that 0.5% is a red line for the BOJ, and we expect that after maybe at the press conference or possibly the state policy statement that the BOJ mentioned that they will continue raising the policy rate, but only at a slow pace.
What will you be looking at in today's press conference and also statement for indications of how fast those rate hikes will go?
So basically, I do not think that they will say very clear number that every quarter, every year, such kind of numbers. But we hope to see is that some statement that's saying that the BOJ will only slowly raise the policy rate compared with the other DM economy, where they raise the policy rate every meeting or every quarter, which was normal in those countries. But in Japan, this is not the monetary tightening. What we are experiencing is a structural change of the Japanese economy, which has been trapped under deflation for 2 decades, to the more normal economy inflation.
Which is, of course, helped by the fact that a cheaper yen does make inflationary pressures a little bit stronger. But at the same time, if it's too strong, of course, it could derail the momentum. If it's too weak, Japanese households suffer. Which is the bigger risk in 2025? Much weaker yen or a much stronger yen?
Basically, we still expect that the risk is skewed toward the yen depreciation. Our FX strategists now expect that the dollar yen goes to the 162 in 12 months' time. So slow kind of, but steady depreciation going forward. So
you don't expect a sort of red line, especially coming from political pressure?
At this moment, that this is a very tough call, that where is the red line, that this should be changing over time, and it should depend on the diplomatic or political kind of events. And so that's why we don't really say that. We cannot say that the 160 or something is a real red line. But at least we can say that if the yen depreciates further and at a very fast pace, which provides some additional kind of push for the BOJ to raise the policy rate earlier. So we expect that, I just said that we expect a rate hike every 6 months, but yen depreciation could accelerate those pace a bit.
At 162, what is the net effect on the health of the Japanese economy?
Basically, that compared with the 10, 20 years ago, the impact of the weak yen on the Japanese real economy gets much smaller. So 20 years ago, cheaper yen, which means that we can sell our exporting the cars and other export products at a cheaper price to the United States and other countries, and that's a good thing. But now it doesn't happen anymore. So we can, but the export is just to stay flat. So in those cases, now we can focus on that the impact on inflation. So that is not necessarily a good thing, especially for Japanese consumers. And that, of course, is what the BOJ is thinking about. So in that sense, a bit negative, especially from the quality and the cost of living perspective. But if it stays around a few % depreciation, it should be manageable.
Okay. Tomohiro Ota, good to have you with us. He's from Goldman Sachs and, of course, digesting and previewing that Bank of Japan policy decision. Great to have you in our Tokyo studio. Still ahead on Bloomberg, we'll continue our coverage of BOJ Decision Day with analysis from JP Morgan, Nikko Asset Management, as well as former Deputy Governor, Bank of Japan, Masazumi Wakatabe. Paul.
Well, Hong Kong Financial Secretary Paul Chan says the city's long-term growth means it must reinforce its status as an international financial hub. He spoke to Bloomberg in Davos about how Hong Kong is preparing for President Trump's potential tariffs and sanctions.
Perhaps the way for us to respond to that is, on the one hand, continue to engage and reinforce the relationship with our U.S. business partners, but at the same time open up new markets, new capital sources, like ASEAN, like Middle East, or in general, Global South, emerging economies.
The other concern is also the sanctions list. Is there concern that perhaps Trump may expand that sanctions list? I mean, you're the highest-ranking non-sanctions executive in Hong Kong.
Oh, on this, in the sanctions on individuals, we have seen that it may have caused some inconvenience to the persons concerned, but it doesn't cause any systematic risk. So indeed, to us, it's nothing.
Hong Kong's growth is front and center. People are wondering how you're positioning Hong Kong for long-term growth.
For long-term growth, we need to play to our strength and capture the major global trend. Play to our strength, meaning that in terms of international financial center status, we need to enhance our offerings, our competitiveness. This is one. In terms of trading, as I mentioned, we align our positioning to facilitate mainland and international trade. And for the new area, the way we see it is technology and innovation. And we have been investing heavily in this area, and we focus on 4 areas. One is artificial intelligence and big data analytics. The other is biotech, health tech. The third one is fintech. The fourth one is new material, new energy. So we groom this sector and also work closely with Shenzhen and other cities in the Greater Bay Area to leverage each other's competitive advantages. The vision we have is the GBA, Greater Bay Area, will rise as a combination of the San Francisco Bay Area and the New York Bay Area.
You talked about Hong Kong's capital market. China has come out to say that investor confidence remains fragile. How do you respond to that?
Well, the way we see it, the economy is growing steadily. The economic structure did have going through transformation, but that would enable the growth to be on a more diversified and sustained basis. We need to concentrate our efforts in doing the right thing.
Hong Kong Financial Secretary Paul Chan with Bloomberg's Hazinda Amin there joining us from Davos. Take a look at how markets are trading early in the Asia session as we head towards a Bank of Japan policy decision. The Nikkei is gaining ground with every sector in the green, but the Topix Bank Index is in fact down 0.5%. Of course, we are expecting that 25 basis point rate hike coming from the Bank of Japan, the first hike since July, the third one under the current governor, Kazuo Ueda. The Kospi is also gaining about 1%. Of course, we continue to watch the Korean won very closely. They have struggled with their economy. They're selling special bonds to stabilize the currency. The ASX 200 also trading higher. This is Bloomberg.
AI is not slowing down, so we need to think about how do we build this in a more collaborative way.
Today, there are a lot of companies who are deploying AI in digitization, in their tech solutions.
The U.S. is ahead in models. The West is ahead in chips.
As more and more reasoning thought is done by AI, we're going to more and more see reasoning that's like super persuasive, but might have really subtle flaws in it.
It's going to take decades to actually be rolled fully to enterprises, rolled fully to the way we actually behave and the way we actually deal with computers.
And I polled people in Norges just before Christmas when I asked them, how much more efficient are you now because of the new tools? And on average, people thought they were 15% more efficient.
Business leaders on the AI outlook speaking there at the World Economic Forum in Davos. Let's take a look at how tech stocks are moving in Asia at the moment. We're seeing shares in Disco take a bit of a beating at the moment. Disco provides equipment used in the manufacture of chips. It's off 5.8%. It was off by more than that a little bit earlier, reporting guidance for the quarter that fell short of analysts' expectations. Seeing a little bit of weakness for Sony as well. Sony saying it sees US video game spending falling in December, and we saw EA suffering as well in the US session on the back of similar concerns there. SK Hynix, though, having a pretty good day, better by 2.7%. President Trump has criticised the European Union for targeting American tech companies like Apple, Google and Meta, calling it a form of taxation. We're joined now by Bloomberg technology reporter Mark Gurman with more on this. Mark, what actual pressure beyond words could we see the president applying on the EU?
Well, let's just take a step back here. You know, you saw Jeff Bezos, Mark Zuckerberg, Tim Cook, Sundar Pichai at the Trump inauguration earlier this week. Plenty of reasons why they're playing ball with Trump. One of the reasons is they're trying to pressure Trump into putting pressure, whether that's retaliatory, whether it's statements, whether that's something else, on the European Union to get them off their back, right? Apple's been complaining for years that the European Union is trying to upend the App Store, trying to change the way they sell their products, trying to change the way the products integrate. The European Union has been behaving similarly with Amazon, right? Don't forget that Amazon has been trying to buy companies. The European Union has been getting in the way among other regulators in other places. Meta has been facing similar pressure to Apple in the European Union by their regulators as well. And so their hope is that as the President of the United States, Trump is going to be able to put policies in place to retaliate against the European Union, right, the 27 countries that make up that part of the world, and get them to lay off of them. And so now you see Trump, after they donated millions of dollars, after they went to the inauguration, keeping his word that he's going to push back against the EU. But that's just one statement. There's no telling how much further he's going to go.
So, Mark, when it comes to really pressure on tech companies, we're seeing it from all sides, right? Especially now we're hearing from the Indian government itself when it comes to the likes of Apple and Google providing access to the government's apps. Explain to us the significance of this change in this ecosystem.
So India has its own app store with a slew of applications distributed by the Indian government to consumers there, right? And if the Indian government wanted, they could release those applications on an individual basis via the App Store or via the Google Play Store on Android devices. But what India, and this is their technology and commerce part of the government, what they're wanting Apple to do is make it easy to pre-install those applications on the phones. And we've seen Apple, bend over backwards to other countries who've enacted this as a law. The prime example actually is Russia. They created a law several years ago that requires the phone makers, when you boot up an iPhone or an iPad or a Mac for the first time, to get an option to install all the government-created apps for citizens of Russia, within that country. And so India is wanting to do the same. They're considering turning that into a law, we've reported. And if they do make it a law, I would fully expect Apple to comply with that law, especially because India is one of their growth markets, right? They did it for Russia, which is not a place where they sell a lot of products. They're certainly going to do it for India, where they're banking some of their future on.
Bloomberg technology reporter Mark Gurman there with the latest on tech. And here are some of the other stories that we're following. Bloomberg has learned that Italian lender Monte Paschi is exploring a potential bid for Mediobanca. Sources say it's considering a move to acquire full or partial control, and an announcement could come as soon as Friday. We're told Mediobanca may oppose any approach from Monte Paschi and consider various counter moves. Korea Zinc CEO Yoon Bi-chae has retained control of the company after an emergency shareholder meeting was called to head off a takeover bid by its top investors, Yongpeng and MBK Partners. The Korea Zinc side secured the 7 remaining seats on the 12-member board after shareholders voted to limit the number of board directors to 19. But the outcome remains uncertain, as Yongpeng and MBK plan to challenge the voting restrictions in court. Boeing reported fourth quarter revenue that missed analyst estimates after last year's bruising strike that idled most of its aircraft production. Preliminary results show sales were around $15 billion with a loss per share of $5.46. Boeing took a hit of over $1 billion as charges tied to the strike and expects another $1.7 billion impact from troubled defense programs. It reports full results on Tuesday. Travel services provider Trip.com says it's optimistic about the global industry as the post-pandemic recovery extends. CEO Jane Sun spoke to us in Davos about what travelers are looking at before they book.
After COVID, it's really ramping up nicely. People will consider three factors before they make their decision where to go. The first one is safety. That is always the focus for travelers to make their decision where to go. The second one is visa application. Countries which give travelers free visa normally attracts most of the travelers. The third one is direct flights. After COVID, lots of airlines are recovering very nicely. So we look forward to further recovery in 2025.
One point of discussion that we've had at Davos this year has been about the impact, though, of the return of tourism on local communities. How is that impacting your business and what measures are you taking?
It's huge. As you know, travel contributes to 10% of the global GDP and contributes to 11% of the job opportunities around the world. So when we bring travelers from one region to the other, they will buy stuffs, they will eat, they will stay, so they bring dynamics into the local communities. It's very important for local small and medium-sized businesses. It's very important for job creation.
What about some of the concerns about the more negative impacts on local communities? How does that affect how you approach?
Lots of top-tier cities are addressing the unbalanced tourism. For example, during Christmas, everyone comes, so it's very crowded. During certain holidays, everyone comes. So what we can do is really compare the calendar from different communities. For example, Western holidays, Christmas is peak. Chinese holidays, Chinese New Year is peak. And Deepavali for India is a little bit in the spring. So if we do it smartly, the unbalanced tourism can be addressed.
That's Trip.com CEO Jane Sun speaking in Davos to Bloomberg's Rebecca Chung-Wilkins. We have more ahead on the Asia trade. This is Bloomberg. This is the Asia Trade. Here are the latest stories out of Wall Street. JP Morgan boosted CEO Jamie Dimon's pay last year to $39 million as the lender posted a record-breaking annual profit. Dimon's pay jumped about 8% from the $36 million he earned in 2023. JP Morgan made close to $60 billion in profit last year. Dimon has run the bank now for almost 2 decades, and questions are growing over when he will retire and who will succeed him. President Trump surprised Bank of America CEO Brian Moynihan in his address in Davos, accusing the lender of limiting business with conservatives. Trump was speaking virtually at the World Economic Forum, where Moynihan quickly changed the subject. The bank later issued a statement saying it never closes accounts for political reasons and doesn't have a political litmus test.
I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. They don't take conservative business. And I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Right. We'll continue to watch Japanese assets, especially financials, as they're under pressure right now with the Topix Bank's index down 0.5%. Of course, this as we are headed towards a Bank of Japan policy decision. More rate hikes could help the profits of these banks, but we know that liquidity could also become an issue for regional banks. We will be watching the broader Japanese yen and the stock market as well. We continue to see gains for the Nikkei, 5 sessions of gains, the longest streak since the summer back in August of last year. We are seeing every sector on the Nikkei in the green broadly, but the Japanese yen continuing to weaken against the US dollar, perhaps a little bit of sell the news given that this BOJ rate hike has been mostly priced in. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.